Tesla just smashed deliveries for Q2. We called this out perfectly. This was as expected if you are a viewer of this channel. As far as Wall Street, nobody expected this. Not one analyst, not one, expected this delivery number. Short sellers could be in a world of trouble. We have the latest with Tesla, how Tesla stock is likely to react to this latest data, and much more. We have some analyst comments from Dan Ives as well in this video. Ladies and gentlemen, if this is your first time to the channel and you want to make more money, you want to reach financial freedom as quickly as possible, you want to grow your net worth, or stay up to date with everything happening in the markets as well as with Tesla stock and make some sweet, sweet money, hit the subscribe button, hit the like button as well. Comment down below. Let me know what you guys think about this delivery number. How is Tesla stock about to react? As you can see from the thumbnail of this video, or likely a lot of you guys already know, Tesla's deliveries came out at 466,140 deliveries. This is better than any other estimate on Wall Street. That's why you guys watch videos such as these, because we have much better estimates. The latest estimate that I put out in yesterday's video was in between 460 and 470,000 deliveries. Now wait, Tesla beat on the estimates by quite a bit. The estimate was 445,000 deliveries. The highest analyst estimate was around 455,000 deliveries. So what is Wall Street saying about this? Quote, Tesla continues to play chess while other EV players are playing checkers, and this was another trophy case quarter for Musk and co. Despite much skepticism from the street the last few months, this will create some fireworks for the bears, said Wedbush analyst Dan Ives. Price cuts implemented early in 2023 have paid major dividends for Musk, as demand appears to remain very strong and production efficiencies have allowed for the massive deliveries beat this quarter, he added. Overall, we believe Tesla is still on track to hit its 1.8 million unit delivery boogie for the year with this performance, and should be able to do it with a margin story that troughs over the next 1 to 2 quarters and ramps back up in full year 2024. Now, this is somewhat expected from Dan Ives. He's very bullish on Tesla, but the bears recently have doubled down their short positions on Tesla. A lot of you guys might not know this, but you have the highest short position on Tesla that you have seen in over 2 years. Matter of fact, you have to go back to June 15th of 2021 to see more shares sold short than where we are now, with about 96 million shares currently sold short. The dollar amount on this short position is $24 billion. After this latest delivery number, shorts are about to get crushed in a massive way. This all comes down to expectations, whether you exceed expectations or you miss expectations. And there's been a couple recent bullish developments as far as expectations. Some of your biggest Wall Street banks lately have downgraded Tesla based on valuations. They don't agree with where Tesla trades. We've talked about this before, and I think this will become reality. But essentially, Apple or Microsoft, all of your big tech besides Amazon, is trading more expensive today than Tesla when you factor in growth. And if you're investing in technology and growth stocks, shouldn't you always factor in growth? That's the big part of the equation that even some of your biggest Wall Street banks are missing. Tesla is growing, and this quarter's delivery number shows exactly that. Deliveries are up 83% year over year. This is somewhat an unfair comparison since Shanghai was closed for most of Q2 2022. But even if you factor in a normal production rate for Shanghai back in 2022, you still grew about 50% year over year. When Wall Street is expecting 25 to 30% growth rates in 2024, you're way off sides from the numbers that Tesla is actually giving us. Even Troy Teslike, an independent researcher who goes over and kind of updates his estimates for Tesla deliveries, was only expecting 448,000 deliveries. You came in even much higher than he did. So this creates an interesting dynamic, in which I think is very bullish for Tesla. Analysts were around 445,000 deliveries. Tesla well exceeded that. Now, you could argue that Tesla's recent rally in its share price has baked in some degree of good news. But did it bake in beating even the highest Wall Street estimates by over 16,000 deliveries? Probably not. This does something big for valuation as well, and likely means that Wall Street banks have to revise some of their downgrades. And potentially, we're going to start to see price target increases based off of this delivery number. Piper Sandler's senior research analyst Alexander E. Potter wrote in a note on June 26th that, quote, prices have been stable for Tesla during the second quarter on balance. The company's steep discounts in and beyond China in the first quarter sparked cries of a price war in the electrical vehicle market. Potter cautioned that price cuts in Q3, if any, could reignite concern over margins for investors. Now, margins are going to be the next biggest story with Tesla when Tesla reports earnings later this month. Now, the estimates for Tesla have actually been falling. And while margins, they're not going to be to where they were years prior, we're still going to see that trough, like Dan Ives said, where margins bottom out and then you start to recover. Wall Street prices that in ahead of time. Kind of like what you've seen with Micron over the last 2 quarters. If you guys follow that stock, if you know anything about that stock, their margins, everything's been getting worse and worse every quarter, but investors are like, hey, this is the worst it's going to get. Let's buy the stock. And you're probably likely to see the same outcome with Tesla coming around their earnings. Now, Tesla delivered more vehicles than expected. This means that even with lower margins, you're still going to see more bottom line profits. This latest delivery number coming in so much better than expectations from Wall Street means that you're probably going to need to see EPS estimates come up quite a bit. 3 months ago, analysts were expecting 91 cents per share for EPS in this current quarter, or in Q2. Technically, you're not in Q2 anymore. That's what they were expecting. Today, or as of Friday, I should say, the estimate was for 77 cents of EPS. That 77-cent estimate for EPS was based off of a 440,000 delivery number, or 445,000 delivery number. There's a lot of estimates. That's kind of the average estimate. So we well exceeded that. That means estimates likely need to go higher. And this is a very bullish thing for Tesla as of right now. Now, I have not only been bullish on Tesla in these videos, I have been putting my money where my mouth is. And we have some current trades on Tesla stock that was playing an expected delivery beat. That's what we played for. That's where my money was. If you guys want to come see the trades that I currently have on Tesla, or any other trades that I make on Tesla or in the markets, click that link down below in the description of this video to sign up for the trading community. You'll sign up for Patreon, and then I will message you with a link. It's actually an AI generated program that does it for me. So be on the lookout for that if you do sign up. As far as Tesla stock, I think there's things you need to consider in the next couple of weeks. Economic data. That can also affect the markets. It can affect Tesla. Now, I think Tesla is going to be a little bit more insulated to this due to the degree of good news that we got with these delivery numbers. The stock is going higher. Now, as I put out in yesterday's video, or last night's video, maybe I should say, I expected over $300 per share for Tesla if you got over 460,000 deliveries. I think that is almost certain that Tesla stock is going over $300 per share. Now, I said Tesla could likely breach above 350 if you do start to get some shorts panicking and covering on those short positions. But there might be more to that. Due to the degree of this beat, there's always that expectation that maybe things go bad for Tesla. There's always that worst case scenario that people fear. It looks like we're far off of that. So this means when the average analyst price target for Tesla is around $208 per share, if Tesla really starts to break out this week, you're probably going to see some upgrades for Tesla, and you're probably going to see some price target increases. That will also mean the stock will probably perform bullish off of that news. Now, for Tesla stock to rally from current prices around $262 per share to $300 per share, that would be an increase of about 15%. It would not surprise me on Monday if Tesla stock gaps up 10% based off of these numbers. That's kind of the ballpark I expect. I don't expect 20%, although that is possible that Tesla could almost instantly rally to $300 per share. I think 10% for that initial reaction, pretty logical. The first trading day, you could actually rally 15% based off of the degree of this beat to deliveries. That would put the stock at over $300 per share. Now, at that point, considering the shorts are so offsides here, guys, look at these reports. You had 96.5 million shares sold short as of June 15th, 2023. You have not been at 96 million shares sold short since back here. Actually, it's July 15th of 2021. You had 97 million shares sold short. And then you fell, and you have not been above that number ever since. The high that you actually seen for Tesla's short interest was around December of 2020. And you know what happened? The stock went higher, shorts covered on short positions, and that sent Tesla stock even higher. Now, I've also talked about this many times. I see no logical reason why Tesla is trading this low compared to other big tech names. Apple, Microsoft, Google, they're all trading in between 1 to 3 times the valuation of Tesla. Why is Tesla under its August 2022 highs when none of the fears ever materialized with Tesla? I think that is the stark reality that shorts will have to face, and I think that does drive a lot of shorts to cover on short positions this week and the next following weeks. This rally could last all the way into earnings and potentially even go higher after earnings. Big story for Tesla's earnings is all going to be around margins. That's the big story for Tesla from here on out, is margins. But this delivery number means that profit numbers themselves will have to go higher. If margins were also as good as I expect they were in Q2, that means estimates really need to go higher. And the bar has been lowered recently, as I went over previously in this video. You're expecting 77 cents for EPS. 3 months ago, you were expecting 91 cents per share. And like Piper Sandler's analyst quoted, prices have remained pretty stable in Q2. Whereas you've even seen the price of lithium fall 60% since November of 2022. You've seen Berlin get rid of essentially their third shift workers and still producing the same output. Things of this nature is likely to have benefited Tesla's profit margins, and this means the stock's probably going to need to go higher. Now, you have also seen the RSI reset in a pretty good way. The RSI was around 90 back here when Tesla hit its high of $277 in this last cycle. It was about 10 trading days or so. The RSI reset all the way down to 56, and now you're trading at 65. So you're no longer overbought. So Tesla stock has room to rally from here before you get that overbought pressure being put on Tesla. This is the exact same thing that Nvidia did. It rallied aggressively, RSI was oversold, stock came down, it traded sideways for a few days. And then the stock broke its all-time high. And the RSI still was not at the highest point that it had been at previously. Something similar is about to happen with Tesla. And I think 350 is a level that I would shoot for over the next couple of weeks. This is some of the levels that you were at for Tesla when things got really aggressive for the stock. That really aggressive upside, right? You kind of get these blow-off top like rallies after 350. I think 350 is a good psychological level of resistance that investors are going to have to deal with first. I think you might need earnings and margin numbers before you can break above 350, although I could be wrong. Short squeezes can be powerful, and that's exactly what I'm expecting. So to bottom line that, over $300 per share is a certainty in my mind. In between 330, I would say, and 350 is more likely for Tesla. But at least to 330. That's what I'm expecting, at least until we get earnings, which is going to be later in the month of July. Now, economic data and things that happen in the markets can also affect Tesla. Probably not at first, probably not for a few days. We're probably going to be bullish for a few. But after that, it can have a bigger effect on Tesla than not. Now, this week is going to be a big week as far as the economic data is concerned. Monday at 10 o'clock Eastern Standard Time, you are going to get ISM Manufacturing PMI. You're expecting this to come in at 48. Anything under 50 is contractionary. I'll tell you guys right now, the thing the markets are concerned about or will care about is not the Fed raising rates, whether it's 1 or 2 or 3 or 4 more times. It doesn't matter. The only thing markets care about is if we're going into recession or not. That is the bottom line. That is it. If you avoid a recession, things are going to be okay for the markets. Tuesday, we don't have any economic data. Obviously, the markets are closed. Now, on Wednesday, you're going to get the FOMC minutes coming in at 2 p.m. This is a transcript of the last earnings, the last Fed conference, right? Kind of some of the things they said, and you get a little bit more clarity on why the Fed did what they did at the last Fed meeting. It doesn't always move the markets in a big way, but if there's any new details, it could. And then on Thursday at 8:30 a.m. Eastern Standard Time, you're going to get the balance of trade. It's highlighted in red like it's a big catalyst. It's never a big catalyst. Don't pay attention to it. At 10 o'clock in the morning on Thursday, the ISM Services PMI, you're expecting this to come in at 50. Potentially the lower the better here because services have been sticky as far as inflation. Jolt's job openings also come in at 10 o'clock in the morning on Thursday. You're expecting 9.9 million. This would be down from last month's rating of 10.1 million. So a decline of about 200,000 job openings. This is what the Fed wants to see fall. You don't need to see the unemployment rate shoot higher if you get job openings decreasing. That does do its role in constraining the labor market. So watch for that number to come down. That would be very bullish. Now, on Friday is going to be the big day, and that is the non-farm payrolls for the month of June, coming in at 8:30 in the morning. You're expecting 250,000 job ads. Last month was 339,000 job ads. Again, you want to see this lower than expectations, maybe 150, 200,000, but you don't want to see it accelerate even more. But you don't want to see it fall that much. Really coming in line with estimates would be fine for markets. You really don't want a big swing in either direction there. The unemployment rate previously ticked up from 3.4% to 3.7% last month, although you added 339,000 jobs. This was a real head scratcher. Now, the unemployment rate coming out on Friday, again at 8:30 in the morning, you're expecting 3.7%. So you're not expecting a move at all there. but you've seen some weird movement so far in the unemployment rate. So watch all of this economic data. If things do come out that scare the markets or make the markets excited, it could have a positive or negative role to play for Tesla stock. The last thing that I want to highlight in this video is some of the option activity we have seen recently for Tesla. In the past week, you've seen about 6,800 hedge fund and institutional option orders placed worth $1.81 billion with a positive order value of 59%. And a lot of these options were very bullish for this upcoming week. These July 7th expirations were very popular on Friday, and a lot of them were pricing Tesla over $280, $290 per share by the end of this week. Take a look at this one, a July 14th $300 call. This order, $53,000. Some of these trades are quite big in size as well. So that is going to do it for this video. Hit that like button, subscribe to the channel if you want to stay up to date with all of this information, grow your net worth, reach financial freedom as quickly as possible, and make more money. This is your place to be. If you guys want to do exactly that and get yourself some free money, link down below in the description of this video for Webull. Sign up, deposit $1, get yourself 15 free stocks, throw a couple free stocks my way. It's a win-win for everyone involved. And again, if you guys want to come trade with me live in real time as well, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.